Yo, what's up traders? Welcome to a new video. In this video, I'll be going over what is day trading, who are day traders, and first it will be a little bit informative, and later on I will show the charts and I'll show you a few examples of typical day trading trades. Alright, so what is day trading? It's about buying and selling stocks or other financial items within the same day. That's really important. It's about the same day. And the goal is to make a profit by the end of the day by taking advantage of small price movements. So let's say it's Tuesday, market opens, you wait for a little bit of movement in the market, and then once you figure out what the direction is, you take the trade, right? So day trading, day traders, they focus on speed, discipline, and understanding the market. They often use leverage, which means they use borrowed money to increase potential returns, and they trade when market is most active. So if you trade Forex, for example, you have the London session, you have the US session, and those sessions, in those sessions the volatility is the highest. There are many buyers or sellers in the market. So most day traders, they wait for a specific moment. Most of the times when the London session and the US session overlap, they wait for a specific movement in the market and then they pull the trigger. To succeed, day traders need advanced trading platforms that allow quick actions and access to up-to-date market information, and they also use tools like MACD, RSI, and Bollinger Bands to help make decisions. These are the most popular indicators, and for some people they still work. It really depends on if you know how to use them. But advanced trading platforms, you have to think about MetaTrader is enough for I think 95% of the people. You also have CTrader or other trading platforms, but MetaTrader 4 or 5 is just enough for most. And you need to be ahead. You need to be aware of the market information. For example, specific news, CPI, other news that has that have a high big impact on the market, right? For example, NFP. So that's really something you have to take into account when you go trading as a or when you trade as a day trader. There are a few pros and cons of day trading. So day trading can be very profitable but also risky, and it requires constant attention to the market and can lead to high trading costs because of the many trades made. Basically, it's the same as scalping. In a day you take 1 or 2, maybe 3 trades as a day trader, as a scalper even more, but you use bigger lot size than, for example, a swing trader. So bigger lot sizes also means higher trading costs, so you have to be aware of that. But it can be really profitable, really profitable. Who are day traders? They are usually people who can handle stress well, and make quick decisions, smart decisions, and they need to stay focused and manage many trades throughout the day. So that's really trait of a day trader. Let me go over because I forgot something. I didn't mention the difference between day traders and scalpers. So day traders, they focus on speed and discipline and understanding the market, and they use leverage as mentioned. But this is similar to scalpers, but while scalpers make many trades within minutes or seconds, day traders might hold their positions for hours and aiming to profit from larger market moves. Scalpers, they aim for a few pips, 3, 4, 5, 7 pips, and day traders, they hold a little bit longer, to the 10, the 15, the 20, the 30 pips. So yeah, that's the difference. And day traders, they look for opportunities throughout the trading day, whereas scalpers focus on quick, frequent trades to capture small, very small price changes. So that's another difference between day traders and scalpers. Um, is day trading something for you? Well, you have to think about you have to consider many things. So think about whether you're good at making fast decisions, following rules strictly, and handling stress. Day trading is challenging, but it can be very rewarding if you are well prepared and dedicated. So that is something you really have to keep in mind. Uh, you have to be fast. You also have to really need to know about specific market events. Yeah, you also need to be mentioned quick. And what helps is also that you know how to follow rules and also do it strictly. Okay, so let me show you the charts. All right, so I'm looking at the Euro USD pair. This is the 50-minute time frame. This is an okay time frame for day traders. Most of the day traders, they use the 15, the 30, or the 1 hour time frame. Now we're looking at the 50-minute. Over here we see it's in the evening. At night we see a big drop to the downside. Perhaps something happened. I'm not sure. It's longer than a month ago. But something happened, perhaps news. It retests a little bit to the upside. And then we see at the US session, about 4 or 5 o'clock, we see that the price doesn't keep higher and higher. It stops. Also at this supply zone over here, this is a supply zone. A little bit lower. The supply zone we see over here, we see that it retests the supply zone and it goes to the downside. And this is the US market. If I go the US session, if I go to the RSI indicator, we see it is overbought over here. We see it's overbought over here. And we see that it doesn't go higher anymore. So what you can do about here, this is not really, it's the end of the US session, so I don't recommend trading. But what you can do, you wait for the next day. You see that it ranges, and once you see a big candle, you can take the trade. Over here we see 4 candles in a row, but this is it's a big one. Over here, or even over here, we take the sell trade. And over here, this is a nice 1-to-2 risk reward ratio trade. Over here, this is the US and the London session, and the US overlap between 1:12 and 2 o'clock. It's a nice overlap, and so this is the perfect moment to just take a sell trade. So that's nice. Let me show you another one. Over here, as you can see, it's a downtrend. We go zoom in a little bit. We see that price goes to the upside a little bit to just take a retest, and then finally we see a big candle, but we do not trade at this time because it is London. I mean, it's Asian. We don't trade the Asian session because there's most of the time not a lot of volatility. We wait. This is the London open at 9 o'clock. You can take a sell trade, but we see that the price went to the downside for a long time, so there's a big chance that it retests, but it didn't until about here. Here it makes the retest, but yeah, you could take this trade from the London session and then you enter, I mean you get out of the trade at the US session. Over here was a nice 1.41 to 1.4 risk reward ratio trade. So that is something, this is a trade that you could have taken. This is the last example. We see price goes to the downside. We see the reaction. It's a retest. Over here we see it not overbought, but we do see it seems like a divergence trade, meaning the RSI over here is lower than this high, but the price over here is higher. The high is higher than this high over here. So we wait for a reaction, which is here, a big candle during the US session. So we take a sell trade, and over here there was a nice one. If you wanna wait, and let me see, when is the end of the day, it's about here. So if you just waited and then close the trade at the end of the day, that's about here. So here, so it was a nice 1 to 1.35 risk reward ratio trade, which is yeah, a really nice one. So I showed you a few examples of day trading trades. If you like this video, give it a thumbs up, subscribe, and I'll see you in the next video.